this thing even on? Can you hear me? Okay. So right. I forgot that I removed the speech at the bottom. Yeah, that that can come back. So another week of looking at charts. This week, I am only starting now because I was watching the Manchester Derby and did 0-0. So yeah, I figured that I'd do it now. Otherwise, I'm probably gonna forget to do it and just continue with my trading. So yeah, I'll start here at Euro USD, looking at it on a 30-minute chart, and to be honest, I'm a little upset because I took this trade on the Monday. Like, let's even, I had to go somewhere, so I figured I'd just take a trade and then let it do its thing. I was only looking for 30 pips, and then imagine coming back in the afternoon and watching that price went 70 pips, and I was like, alright. So I was kind of off Euro USD for the rest of the week, and then imagine my surprise when I realized, because when I got stopped out, I was like, oh, okay, so I got it wrong because I picked the wrong entry point, right? I tried to get in at this fair value gap when there was an order block just below it. And what happened is price did not just go 70 pips. Like, if I got in here at this fair value, at this order block somewhere here, that is a whopping 330, 340 pips. Let's call it 350 pips. 350 pips were available to me. But it has to be said that I am not a swing trader. So I probably would not have let this. This wasn't on Monday. This was on Wednesday. Shit. Yeah, I'm not a swing trader. One, two. I probably would have targeted this buy side level over here. Three, if not, what I wouldn't have had price going all the way up to that equilibrium of the monthly level. I don't know what monthly level it is, but also I found this cool indicator. Um, where do I find it? It's basically ICT HTF candles by Fadi. It's so cool because yeah, this is showing me a 4 hour, like what the 4 hour candles look like, so I can see what the 4 hours look like forming on the 30-minute chart. But it's also cool because if I go down to the 5 minute, now it's showing me the 30-minute and the 4 hour, which is, I think, is pretty cool. But I digress. Let's give you what you're here for. I want to eat during stream. I don't know if you guys will be able to hear that if I didn't tell you that I was eating, but maybe. So here we are, daily chart Euro USD, and guess what? We hit buy side on this range, continued expanding into some higher time frame PD arrays, and then we reversed. Right, pretty cool. Extend those a little bit, extend it up to here, I guess. Yeah, that's okay. This one also. Yeah, a little bit of perfectionist, but want to see exactly how it is. Hold on. So this is a completely wrong idea because price was just pulling back to go to a higher time frame PD. Which means this range. I can actually take this off because it's no longer just daily sell side, it's a weekly sell side. It's actually from here I apologize for the chewing, but I'm hungry, man. And you guys aren't paying me to do this yet. So this is the range. You can see we went up into the extension and then closed that just above the opening price. So this is no longer valid. Nor is this. Actually, let's go up to the monthly chart. Start there. So this is clearly could be holding. And we had a deep retracement. Okay. There's two ways we could go about this. Continue using this rejection block. Extend it on into next month, actually no. Extend it into next week. So I could use this rejection block, or could use this order block here. But seeing as we've traded through this order block into the rejection block here, I'm just going to keep this on as the drawn liquidity. This is no longer valid because we've had a proper close above it and the month has ended. I didn't remove it last week because the month hadn't ended. But now that the month is over, it is no longer valid. So what we could have is an OTE with price coming back down to here to then move up, have the real move higher. But I don't see it on, let's put it this way. If we do go back down here, it's gonna take several months, I think. Why? Because from a commerce perspective, it's not good for Europe to have their rate at 0.98. It is better for them to have it at a higher than 1-to-1 ratio. How do I say that? Let's zoom out a little bit. Right. Where is the 1 point, the 1 parity? Still don't know trading with shortcuts. This is close enough, right? How much time has the price been above this 1-to-1 parity line versus below this 1-to-1 parity line? Let's just look. This is since 1970 something, right? Spent a couple years up until 78. Just call it 79 for ease of counting. So that's what, 7 years, 8 years. And then from here, January 81 till January 87. That's another 6 years, total 14 years. 14 years, and then here is 2000 up until 2002. That's 2 years, 16 years. Over the last, and that's barely, that was like a month or two. When Rishi, but that's GU anyway. Let me not say too much. But essentially, over the last, what's this, 40 years? Because that's 20 years. This is another 20 years. Another 7 years. That's 20, 47 years. So 47 years, and it spent like 16 years below this line. 16 minus 47, which means we have like 31 years where price is been defended to stay above the zero line, the one parity line. So my guess is that they're gonna keep defending this line and not want price to go below it, but I don't know what the actual causes are, or like the things that happened. Like I guess I can only guess was the .com bubble, right? And war on terror, blah blah blah, and then eventually things just like went that way. 2020, I could tell you it was COVID. Where's COVID? Here, this March 2020. And then everything spiked, and then it came back down over the next 2 years, and then last year was kind of recovery. The last 2 years were kind of recovery, but whatever. We're here to look at technical analysis. Technical analysis says that this month has begun very bullishly, tested some key levels, so we might have a retracement into this area here. If we were to have a retracement, what would be there on the weekly chart for us to retrace into? Fair value gap, possibly an order block too. Breaker block would be because we did retrace into this order block. Now I can remove these. Remove this. Can remove this. Actually, we'll just move this, not remove it. Because we have this fair value gap up here, which we traded into but did not close above. So as you can see, there is a cluster of key levels in this area, which could lead to lower prices before continuing higher. Also, this would be the ultimate high draw on liquidity. I hope I'm using that word properly. If you guys know how this word is supposed to be used, please tell me. But then again, there's this high which is higher than that one. So that is the ultimate buy side draw on liquidity. What we do have here is another level of sell side liquidity here. Shall extend for the rest of this month. And this is not a swing high yet, so that's why I'm not marking it out as buy side. But we do have this swing high over here, which price closed above. So we traded up into an order block and rejected it heavily and closed below this fair value gap. Makes me think. Then again, we also have that swing low. So we could just complete this fair value gap here that would be forming at the end of this order block. Because it's an order block now because price did trade above and closed, traded and closed above it, and this is the last down candle before the up move, so that's why I'm calling it an order block. Plus it came from a retracement into a key level, so yeah, I said I'll extend this on this time frame. See how far we go. That and this also can get extended. This too can also get extended. So as you can see, we've had some bullishness since the start of the year. Strong, very strong bullishness on the first week of March and this week also, but we retraced and closed above the liquidity level, but still likely to see a retracement into at least even here before continuing to the upside. So this is maybe what I see for Euro USD this upcoming week. Actually, I forgot to check the economic calendar. So let's have a look at that. Economic calendar. While it's loading, I take a bite of food. A lot of traders online. Got 28 people out here with me. I don't know why I like doing that, but yeah. Okay, so this is what we have this week. We have FOMC Wednesday, afternoon. Thursday we have CPI. Friday we have PPI. Okay. Let's go down to the daily. Can take this off because we've already used it. And I'm starting to appreciate the concept even better. Actually, let me take this off too because I'm not gonna use this anymore. Just highlighting something. So even this doesn't need to be here. This is okay. What's the low here? 180. Okay, I'll use that one. Thursday, Friday, Monday. Oh, it's weekly buy side liquidity now. Oh, I did mark it as daily and weekly, but now it's just weekly. Okay. And you see how just cleaning up charts, man. Want it to look presentable. There's an order block back here. Which one do I use? Is a question I often ask myself. But just because the close is higher on this candle than it is on this candle, but let's look at the high here. 12,134, 12,084. So this is the high. So this is the candle before the high. And also, if you look at this close, it's at 11,781. This close at 11,754. So I will just anchor this over there. And this is our bearish order block. If you can extend it to time ahead of next week. Wow. Right. I mean, these are the times, or these are the things that you see on the chart and you just appreciate as a technical analyst. When price absolutely converges, or like how many confluences do you need to know that price is going up there? Well, first of all, you have to mark them on the chart before you can even think about them going there. So, what do we have here? We have this OTE level, extension level. We have the midpoint of, kind of respected the midpoint. We have the mean threshold of this order block and the mean threshold of this rejection block. Bro, I don't know what to tell you. Like, price literally did turn around there. So, I guess there is some truth to the preachings or scriptures, or call it scriptures, the preachings of Mr. ICT. Moved too far. Nay. Extend it to here. And this we can use on this tiny gap that we have here. Is it even a gap? It's barely a gap. Yeah, so I'm just going to delete that. And you can see we took out, this was at 20 days. We took out the low of the 20 days and then we consolidated. And then here we're looking back 20 days. This is the lowest low of the last, this was the low of the last 20 days. And this was the high of the 20 days. And guess what? We went to the high of the 20 days. And at the high of the 20 days, we retraced and broke the high of the 40 days. And as we continued going, we even broke the high of the 60 days. So what does that tell you? It's a bull trend. It's a bull market. Okay. So what am I going to do is grab hold of these and move them forward, because yeah, 60 days means that a new cycle is going to begin. And this is a cycle that I was tracking using 14th January. Why 14th January? Because that was the day I started tracking this cycle. And look, I'm off the market maker model by market maker low model low by a day. So if I had started there, you would see that now is when this cycle is being complete. But even if we took this as when the cycle is being complete, when did it begin? Well, we came back into this range that we broke. So that would be the low. So we broke the low, traded back in, and then pushed lower. And what day is this? This is October 17th. Why would I use October 17th? I wouldn't. So that's why it's hard to know what the actual low is. Okay, let's do an experiment and look at, like, this is gonna be a different weekly forecast than, you know, I'm just looking at things and trying to see if there's any truth to them being the way they are. So let's go back to October 17th. October 17th. The financing rate, policy statement, ECB conference, and then retail sales or whatever it is. So on this day, 60 days later, we have a low. What if I use this low to be the start of, to measure the start of the cycle? Gives an interesting picture, because then tomorrow is the end of the cycle and a new one begins. And does that mean that now I start looking for bearishness? I have no clue if any of that is valid correlation or whatever it is. It's just something I see on the charts, and I'm trying to piece together, well, does this help or not? To be honest, not really, because I'm an intraday trader and I'm looking for, I guess it would be price patterns or like behaviors. Okay, so this low is okay, and this is here. So I grab this out. Yeah, this is the last 20, 40, and 60 days. Now, 15, so it should be 75. Okay. This is looking at on a quarter basis. Slightly off because the first day was here, unless my calibration is off. 20 bars, 40 bars, 60 bars. Okay. Not off at all. Yeah, so this is the high of the last 20 days. And this is the low of the 20 days. So why it would be significant for price to trade below this low. We do have levels of buy side back here. Very equal highs, might I add. Very equal highs, especially those two. Like roughly this much. I mean, that did get purged, but yeah, roughly equal highs. It's my guess that we're gonna retrace into down here and then push higher for this level of buy side liquidity up here. Over the next couple months. And that is what I see on Euro USD. Shit, I've already been going for 20 minutes now. Wow. No views, no comments yet, but keep it that. This is actually invalid. Go. Let's recycle this, put it up here. And yeah, another PD array aligning with the OTE level. Honestly, I see retracement into here, midpoint of this range slash the high of the last 60 days. So yeah, we made a high. We might make a higher high and then come back lower, or make a lower high and then retrace into here before we continue to the upside. So I am quite bearish on Euro USD for the upcoming week, and also because like look at what's been going on in the rest of the markets. Like, okay, that's Euro dollar. Just the Friday was bearish, but if we look at US 30, if we look at Nasdaq, if we look at S&P. Oh my gosh, I actually got that. Alright, that was Nasdaq, but I wanted an entry up here instead of here. So I was looking at retracement into up here before we go lower, and guess what? Price just continued extending to the downside. Everything's bearish right now. So if that means everything's bearish, that means Euro USD should be bullish, because if DXY is going down, then Euro dollar should be going up. And I'll just look at the DXY for now. Let's look at the DXY. I have not looked at this thing, I think, all year. Yeah, see, roughly since December. And like the stock markets, it's just been going down. Might see a retracement back up into here. Oh, look, we inverted. This is a monthly level. So we broke below, came back into this fair value gap on the daily, inverting this movement, and then continued to push lower into this overlap of order blocks. But I don't look at the DXY because I don't feel like I have to. So let's get down to gold. Look at on the monthly chart first. Let me take another bite of food. I'm not gonna lie. I'm a little upset with how gold has gone because I didn't participate in it. Right? That is gone. Next level that we might retrace to is either this or this monthly level, is what I'm seeing. Because this is March 3rd, right? It's the high and the low. 1, 5, and this will at 75. 20 days, 40 days, 60 days. This is probably a weekly low, but let's go back to the monthly chart. This was only confirmed after this candle closed, because here, yeah, we closed above it, but there was no fair value gap. So this fair value gap here is what confirmed this as, I guess, a mitigation block. Oh, we need to move all-time high to up here now. We could see continued retracement into this level here, and then push off higher, just like we saw in this candle, or this candle here, or this candle here, or this. You get the point, okay? So this is what it looks like on a monthly chart. I guess I'll put this imbalance there first, and then if we break through the imbalance, then we're probably going to go somewhere in the fair value gap or down here. Weekly chart. I should probably get rid of this now because this price swing has been completed, which means I would adjust to the next swing low. Where's the high after that? It's here. We retraced, and then here's the next swing low. There's the high after that. Is what's this high? 95497, 95624. So that just kept on going higher. Actually, I have nowhere to anchor it. This is an interesting place to be in because I honestly have nowhere to anchor it. There's no swing high. Where is the swing high for me to anchor it? Do you want me to anchor it to here? Well, we don't have a swing high yet. Next week hasn't formed. So guess what? I'm just gonna go back to this because that's the only logical place that we can use. Anyway, extend this into another week. Do I see anything else? No, there's nothing else. So I'm banking on a retracement to here. So bearish gold next week. Now we come back to the daily chart. Is that swing? Oh, it's not a swing low. It's a wick. It's a regular wick. Unless I do this. So you know what? Let me just reuse the ones from EU. Did you know that you can copy drawing tools from one chart and then paste them on another chart in TradingView? Like, shout out to the devs for features like this. Yeah, man, I gotta get some grub in because otherwise I don't have any fuel to tell you guys what I'm seeing. Alright, let's extend this to mid-year. Okay, so this is the one that needs to go. The rest are still levels of daily sell side. This is invalid. Also fairly invalid. We did trade into here. Yeah. Let me do that. What's gonna happen next week? Well, tomorrow. Is what I'm expecting to see because of the way the weekly calendar is set up and what I'm seeing on the charts here is Monday will likely have an inside day. We might tap into this fair value gap again. Like, this is what I'm expecting to see. Monday is having an inside day that's going to be slightly bullish, close maybe somewhere here. Tuesday also bullish, you know, make it look like we're going higher or like close somewhere here. And then Wednesday, Thursday, Friday come bounce into there and retrace. Or we could even have Monday just sweep in there and then Tuesday go higher before anything. But I am bearish on this pair next week. Extend this to here because this has been like for the last 3 weeks. And this also still valid. What do we have in terms of bullish? On this side is only just got this order block here. If we break above that, then definitely we're bullish. But so far, I don't even see that being retested. We just might retrace into this fair value gap, invert it, and go lower, even though that's what we already did on the lower time frames. We might end up doing the exact same thing on these higher time frames. That being said, is bearish on euro dollar next week and gold also. If anything happens midstream, then I'll just shift gears and go in the other direction, but for now this is what we have. Okay, so those are the trades I took on Wednesday stream. I only traded once this week on that account. From the new high. So I was off with the entry because I could have gotten at this order block instead of trying to get in at a rejection block over there. Or what was it? Was it fair block? I don't know. I think I tried to get in on this order block. Maybe. But oh, here it is, rejection block. I didn't even remove those markings. So essentially, I could see that it was bearish, but I couldn't find an entry. I couldn't find a solid place where I could place it for a stop loss, which I'm comfortable with, so that I can enter to the downside. And actually, we'll just take all of this off. I'll do a little bit of markup here to get myself ready for next week, and then I'm gonna end the stream soon. So yeah. This is what I would call a break of structure, because what happened, we closed below several time frame fair value gaps, and here we actually gapped through this low, or formed a fair value gap through the low. So, and then here we had this mini sweep of liquidity, which sent price higher, but not into this gap yet. This is also can be set up here. Why just into midnight? Don't think we'll get there by midnight. So it's cool, you see, we can have this here. But yeah. What else? Oh, that's not supposed to move. This is. So this comes in, locks in on this candle here, because this is the candle right before the liquidity sweep. Extend it out into midnight also. Likely to be traded into in the upcoming Asian session. So we could have price there. Essentially, yes, this we closed above, so also moving it here. There's a very tiny imbalance there, which just tells me that this is going to be a magnet for price to retrace into here. Okay, so we had this level of buy side that was traded into, and price closing just above it. I'm only putting this here now because I want to recycle. Maybe the daily one I should give a little bit more oomph, like 2 pixels, so you know it's a higher time frame. Sell side or buy side or whatever it is, PD ray. This I can delete. This also I can delete. This I can delete. This also I can delete. This can be deleted. Let's probably just trade it all the way to down here. This is the actual low. Perfectionism. Oh well. Guess what it trades into? 30-minute PD array from several trading days ago. Oh man. Okay. Okay. 313. Oh wow. you know, it's seeing things like this just make me realize that it's not even that this thing is random or difficult. It's like, don't fucking understand. Like, okay, let's talk. Hold on, let me take a bite and then I'll tell you something about. So it's like this, right? Remember those Ronaldinho? I'm gonna bring it to you to football, a football reference, so that it could be easier for me to explain. So remember those Ronaldinho YouTube videos where he like shoot the ball and it hit the crossbar and it comes back to him, and then he hits the ball again and it goes to the crossbar, comes back to him. Like you could watch that and say it's Photoshop, where it was edited because you can't do it. I've done that before. I on the training field by myself. I didn't have a camera with me. There was a couple of guys who were doing garden work while taking care of the field area. I banged the ball, right foot, hit the crossbar, came back. Hit the ball with my left foot, hit the crossbar, came back, and I was like, "Oh snap! That Ronaldinho thing wasn't a lie. I just thought it was, like almost impossible for people to do that." And then you go on YouTube and you watch people doing videos of them hitting the crossbar on purpose, and you realize, like, yeah, man, people are just really good at what they do. And this is one of those moments where you realize, like, okay, it's not that this thing is impossible or cannot be done. It's I'm not good enough, or I don't have the skills or competence or aptitude at this point to perform to the level of what it is that I'm comparing against. Because, my guy, like, how much more precise can you get? Like, okay, yeah, I marked it out, but did I know that we were gonna use this order block formed in the New York session on the 26th of March? Did I know that that was gonna be the low for Friday? Absolutely not. I'm just drawing it out right now. I didn't know that this was gonna be the low for Friday. Like I didn't know. I guess I assumed we were gonna hit the sell side. I assumed maybe we'd get to the midpoint here and then reverse higher, but I didn't expect us to exactly stop here. So in this situation, it's one of those moments where you realize it's like, okay, maybe I need to put more effort to understand what it is that I'm supposed to be doing versus complaining that things are difficult, things are hard, or like it's impossible, or it's this, or it's that. No, if other people, other humans have been able to do it, then you also can. It's just gonna take time for you to understand exactly what it is, what steps you need to take in order for you to be able to execute or to perform something, just as you've seen somebody with more experience than you at this moment in time perform it. And that's the biggest difference is time. Because like we look at professionals like, oh my gosh, like I honestly wish there was this dude who tweeted, he was like, I wish like they should invite regular people to the Olympics because then you will be able to see the true difference between the average human and these elite performers. Because these elite performers, when they compete amongst each other, it's like, oh, it's really close. Oh, it's like, oh, he could have put them against a normal person for you to understand how hard this guy or this gal is going. And that's the thing also with trading. You have to realize that over 90%. Like the stats aren't changed since, I don't know, 100 years ago, over 100 years ago. The stats are unchanged. I just watched the podcast today, and there was somebody saying that the number of percentage of traders who are profitable after 5 years is like 2%. Let that sink into your head. 2%. So I'm losing money on stream. I'm literally like everyone else. I'm like 90 something percent of the population. So yeah, I could get mad that I'm losing money. I could get mad that, it's not working in my favor. It's not doing like, but to be honest, like I'm not too different from anyone else, any like majority of the population, if that's the case. Like I'm just like everyone else. So the steps that I'm taking here, the things that I'm showing on stream, the progress is from me going from that majority to the minority of people who actually receive payouts and make consistent withdrawals from trading. Because trading is so easy to start. Like all you have to do is fill in a form. Like sometimes you don't even have to fill in a form. You just give them your email and make a password, and you already have a trading account. You can participate. You can't do that with pretty much almost anything else in the world. You cannot do that and just be thrown straight into the arena with professionals. You can't do it in boxing. You can't do it in medicine. You can't do it in driving. Like, you have to go through driving school for at least a couple weeks, or even if you decide to figure out how to drive by yourself, you have to get a license before they let you play. It's not like that with trading. Like you just sign up here, okay, put in your money, great. Now you go and compete against people with years of experience, and some of them with way more capital than you have. You just are taking it out of context. It's completely out of context what it is that you are participating in and how you can go about becoming one of the few people in this world who actually are consistently making profits. Because it's one thing to make profits. I had a profitable day, but can you be consistent with it? Can you do it week in, week out, day in, day out, session in, session out, month in, month out, year in, year out? Can you do that? That is, for majority of things, is why we have such few people in the spaces of elite performance, whether that is an artist, a singer, a judge, a chef, an accountant. You get an accountant who's in their first year of work, and an accountant who's like seasoned 20-year veteran. It's not even, you can't even compare the efficiency of the two. But I digress. The whole point I'm trying to make here is this stuff works, right? This order blocks, fair value gaps, liquidity pools, it works. Do you understand how it works is a whole different question. And I'm just telling you how I'm using this stuff to try and make money from it, bro. Because why? Because I've spent a long time trying to do that. And I'm really keen on getting a return on my investment. So, yeah. I've got to keep doing this until it eventually does work. And if you're with me for the journey, then that's great. If not, then that's also okay, I guess. Like it's just part of life. We're all here. One day we won't be. So this also could be just something that is used to remember me by. Yeah, with that, I don't have anyone who sent me. I did get one comment on, I think it was my stream from Wednesday. I'll answer your comment. He was asking about the spreads, but it's the weekend right now, so I can't really for sure tell you exactly what the spreads are. And it actually would help me a lot if you could timestamp the specific part of the video that you're talking about so that I can answer you directly or with context to what it was being said at that moment in time. So if you could do that, that would help a lot. So yeah, no viewers, no comments, so no chat. So I'm just gonna end the stream here, get done with my food, and I'll see